guys, welcome to the closing beat. Happy Thursday already. It's the last day of the month, by the way. Lots of good things to cover here today. But first, if you're one of our customers, tonight we're doing Wine and Wealth. That will be live. Of course, you have the email already. If you're not one of our customers, by the way, or you can't make it, here's what you do now. Now you just go right into the dojo, right? This is our video library that we launched yesterday. You just sort by wine and wealth. You can see it off to the left there. And once you do that, you'll actually be able to see all of the wine and wealth classes that we've ever done in history. So if you're just joining us here at Jazz or you haven't seen some of those classes, be sure to check that out. There's also a special geeky section and support section and basic section for those of you that may need help or want to learn a little bit more. So we're going to keep adding to that. Really cool what we're doing with that over time, little by little. That will be sort of our hub where we can all kind of work together on your goals. Hey, anyways, so don't miss Wine and Wealth tonight. The dojo, by the way, is live. If you check your email, you do have an invite to that. And let me know what you think. You like it? Was it good? Waste of time? What should we do there? Hey, okay, here's the markets for the day. We got the Dow down just a little bit, but basically the markets closed out the month of January on a positive note. The S&P 500 gained 23 on the day, and the Nasdaq closed higher by 98. Really, if you look at the Dow, that'll grab the headlines. It actually reversed from its lows, about 150, 170 points, give or take down there at the bottom. So if we just flip over to the Dow real quick, kind of show you what's going on there. Right back to the 200-day moving average and also its downtrend. So this red line here just kind of indicates the technical downtrend. Sure seems like it's trying to perk its way above that. However, we got some stats kind of leaning in the opposite direction. I'll go with the historical stats for now, although I hope I'm wrong. But if you go into the dojo, you can actually see the videos that I've done to kind of show you historical stats based on when the markets have moved like this. It's under the geeky section if you're interested in that. But for the S&P 500, we continue to be above this downtrend now. So second day in a row, we got the close above yesterday. That's a technical sort of timing or indicator that traders look for to see that something is closed above its downtrend. So today was more follow through on that. It had a lot of support, a lot of great stocks today. There are actually now 225 names in the S&P 500 that have closed higher by 10% or more just this month, right? So year to date, run a scan. You got from the beginning of the year till now, that's 1 month exactly, 225 names higher by 10%. That's almost half of the S&P 500 higher by 10%. The index as a whole is up about 8% for the month of January. Quite a snapback from those December lows. We did a video to show how the average retail investor sold their 401ks in the last month of 2018 to the tune of $44 billion. And so we have a lot of those traders. I'm talking to them every day. People going, what do you think? I sold in December. Should I dive back in now? I feel like I'm missing out. That's what happens when you try to time the market, guys. So you can time your contributions, but don't time the deposit or the actual investments, and don't try to buy and sell. You can see how literally in real time we can actually see those people fearing that they're missing out getting back in there. So that's the overall markets. Down on the right here, we got the S&P 500 by 5-minute time period chart. Every one of those little blips is a 5-minute time period. You can see that basically we kind of started off, had a nice little rally, and then the markets were content to just hang in there. Had some trade news come out end of the day, didn't really affect it. Some healthcare news just a few minutes ago. That might hurt a little bit, but we'll cover that here as well. Now, that's the major indices. Actually, did I go over the Nasdaq there for you? Here's the Nasdaq. So continuing to be strong there as well. Lots of good going on actually with the Nasdaq. So let's dive into the individual sectors today. Let's start with the weakness. You're going to have financials. Not too bad. We'll call it a flat day, but for the most part, they were weighed down today. Financials, the big banks, your regional banks, your local, we'll call them regional, hyper-regional banks, all lower on the day. Yields, the reason why, yields headed, there, come on. Load up there. Here we go. So here we go. We got the 10-year note pushing back, prices heading higher, yields heading lower, okay? So with the Fed saying that they want to be patient and we're going to pause here, that sent rates basically back lower again, or prices higher. And of course, that's not very helpful to banks. However, just a little downside there in the banking sector there, so not too big of a deal. If we look at the price of oil, There we go. Price of oil still hovering around the 54 number. It is technically above it, but hovering above 54. Oil goes down as having its best January ever in history with an 18% gain. So really good there for actually for the price of oil. And that will be your leading sector for the month if you happen to follow that sort of thing. If we take a look a little bit take a look a little bit further in here, chips will be a good one of the better performing sectors as well, up about 10% on the month. Those are your semiconductors, your Intels, your AMDs, of course, helping them out in there. And then communication services. Oh, that's not. Let me see, XLC. There we go. Using the XLC to take a look at communication services. Be careful with this one, by the way, if you use this ETF. A lot of what happened today was Facebook. So the sector was your leading sector today, up by over 4%. And again, most of that due to Facebook. If you use like the XLC, which is a communication services ETF, well, almost 18% of this ETF is made up of Facebook. Now, there's some Google and Alphabet and stuff in there as well, and they had good days as well, so 2.5% on that. But just be forewarned, you want to compare the ETFs you're choosing. Got a video coming to the dojo. I'll be loading up there soon to cover that. Gold mining stocks higher again. This is just a little rally in the price of gold, pulling up all the gold mining stocks. Here's the gold futures contract if you want to take a look at that a little bit. Great little rally on that one, all just because of the weakness in the dollar and the pending recession that everybody's betting on with the Fed pausing with their rates there. See yesterday's video. We covered sort of the stats and data on that one there. Utilities a little bit higher on the day. They're actually enjoying a nice little rally since hitting those December lows. A little behind the game, but today made up for a lot of that. Another 2% gain for the utilities, and that is rates lower. Obviously, rates lower helps utilities a lot there. Home builders had some great news this morning, which helped them break out of this range. I kind of been mentioning this little range here, the 36 ceiling that we've had a problem with. Well, today that was solidified. Great numbers, by the way, for new home sales. So if you're in that business, I wonder if you're participating in some of that goodness, because those were great numbers. Healthcare, higher on the day. This one we mentioned on Monday, looking for a bounce on this one. So hopefully I don't get in trouble for mentioning that. But after hours here, you got a little weakness in CVS and Walgreens and such with some news out of the White House. REITs. Depending on which REIT you follow, holy cow, back to highs here. So REITs poking on these all-time highs, that is officially the first sector to get back to the all-time highs there. That's the sector list there. So if you're watching for the first time, we did the stock market, covered the broad indices for those of you that like to follow that. We covered a bunch of sectors actually today, and now we'll move on to some individual stocks, some of which we covered yesterday. Microsoft a little bit lower on the day. They did beat on earnings. They missed on revenue. Look, the cloud transition for them going really well. That all looked really good. The problem was some weakness in other areas of their business, I think because we're drawing from that, headed over to the cloud services side. So far, it proves to be a pretty successful change to this cloud-based system. It's not an easy process. Like Adobe, remember, I don't know if you remember when Adobe went through that, changing over from like Illustrator and Photoshop and stuff over to more of a cloud-based subscription service. Took them a while, but it paid off really, really well for them. So that's Microsoft. Facebook was above the 200-day moving average. We covered this one yesterday. Great earnings, easily beat the lowered expectations that everybody had. The good news about this one today was more people started to move away from the concept of data security and all that stuff and put their focus back on earnings. They beat on earnings. They beat on revenue. It just good. We covered the more detail yesterday when the earnings came out. Tesla did not go lower today. I was cheering this lower. I know some of you guys wanted this lower. Only lost about 0.5% on the day. Did you notice how they snuck that? I don't know if you paid attention to the conference call or saw that or anything. Right at the very end, they're like, oh, by the way, our CFO's resigning. Thanks for coming, everybody. See ya. Have a great night. And they just tried to sneak that one in there. Everybody obviously noticed. Mondelez. If you're following this one, these are Oreos, by the way. Company that makes Oreos and all kinds of other goodness. Mondelez reported their earnings. We own this one in our consumer staples fund that we have here at Jazz Wealth. So great little addition or boost for us today. If you're one of our customers and you're in that consumer staples fund, you should know that Procter & Gamble back to highs here. Coke very nice day. Pepsi, nice day. We own all of these in the fund there, but the focus one is, oh, not that one. Mondelez. So great day today, up about 6%, headed back to highs. They reported estimates that were basically as expected, not really great or bad. It was just kind of what everybody was thinking. But the CEO came on Bloomberg or something like that, and he said that they see really no impact from the slowdown in China, not because China's not slowing, but he actually was commenting that they're not really affected by China, the way their brand is positioned. And of course, people eating snacks, I'm gonna eat Oreos whether China slows down or not, right? I mean, how do you not like want to eat Oreos? So Mondelez, great day, and that one's in our consumer staples fund, so happy to see a nice little boost in that sector today and that fund. Amazon. So they reported earnings, beat on revenue. They guided forward a little bit light. They missed on a few of the core metrics. If you follow along with this, physical stores, is that how they word it? I can't remember. This would be like Whole Foods, right? Their physical stores and Amazon Go and all that. A little bit lower on revenue there. Probably not a big deal. They'll probably get a pass for that one. Where they're going to get a little more scrutiny is on subscriptions. That came in a little bit lower than expected. That's like, Prime, Amazon Prime. The question there is going to be, look, has everybody got the subscription? Is everybody signed up for Amazon Prime that wants to be? And is that it? Have we sort of hit the crest here, or the peak of what could happen there as far as subscriptions? So that'll be a bit of a negative, but Amazon Web Services, killing it, right? I think revenue was higher by over 40%. So that part of the business is just killing it. All in all, I don't know. I think they'll get a pass on some of that. It's trading at 17.21, only up a couple bucks. I think we still have a little time until the conference call. So that's basically all I have on that. GE. Let me see if I could just do this real quick. A couple other names. GE missed earnings, stronger revenues though. MasterCard beat on earnings. Revenues were okay. They beat by a couple cents on earnings. PayPal, we talked about this one already yesterday. Beat on earnings. Blamed eBay. Good for Venmo, by the way. Sherwin-Williams missed on earnings. Revenues were okay, but they guided lower. How'd they finish, by the way, if you're a Sherwin-Williams person there? Not bad. 4% gain on the day. UPS beat on earnings, lowered guidance going forward. These are just my notes. Like crazy amount of notes today. Visa beat on revenues. They were actually a little bit lower, 2% on the day, just kind of moving out of that little sideways range. You want to look at it? I don't know if you guys want to check it out. So we were stuck here at this 200-day when they talked about, the deal that MasterCard stole from them. Not really a big deal, but now starting to break down under that. That's not really a good sign if you're holding Visa. When I believe we mentioned this one yesterday, they missed on earnings. Revenue was better than expected, and they're basically getting behind the whole sexual harassment thing of Steve Wynn paying out settlements and kind of hopefully putting that behind them. So you're starting to see that bottoming there in Wynn. That's just because people have all priced in all that bad news really going back since last summer there. So hopefully the worst is behind for them. Okay, that's what I got there. We got earnings tomorrow from Cigna, Chevron, Honeywell, Merck, Weyerhaeuser, if you follow them, paper company, and ExxonMobil. Is that it? You got, Dominion Energy, you follow them, and Johnson Controls. I'd be interested to see Johnson Controls. Yeah, that's basically all I have for you there. Hey, if you're one of our customers, I'm going to cover this tonight in the Wine and Wealth class. Your retirement account tax forms are now available in your tax centers. Log into your account, top right-hand side of the screen. It says tax forms and account statements. Click on that, and those are ready for you. If you took a withdrawal, a distribution, an early distribution, something like that, they're there ready for you for retirement accounts. Perfect. John loves the dojo. I love it, man. Thanks. I love it. You love the lighting in the room? Yeah, me too. If you're married filing jointly, can you put $6,000 in your Roth IRA for me? $6,000 in your Roth for her? Absolutely. Provided that you have enough income to do that. I'm assuming you do. As long as you personally make $12,000 or more, then you can put for you and for her, as long as you're married, filing jointly, and have the income. We covered Amazon. Nice. Twilio. That's such an interesting company, and I don't know why, but they're marketing to me like a lot. So I'm not sure. I've punched it up on the charts a few times. I'm not sure who's found out that I've been looking at this company, but yeah, very good, and broke out to new highs, by the way, today as well. Good. One of the better, if not the best performing tech IPO in a while, as far as like from start to today. I know Facebook's done well, but that initial ride was a bit rough. The Fed pausing. Why is the 10-year falling so fast? The Fed pausing, right? So we covered this yesterday with the idea. I went through the stats. I even did a video for customers to say, hey, you have the last 3 years, the Fed has been adjusting rates. Now they're pausing. So we went back and studied this and said, what happens when the Fed pauses after a series of adjustments? And every time in history since 1971, because that's all we could track, that's the only time they make those announcements. Before that, they used to just do it. So from 1971 and on, every time but once when they paused from adjusting rates, the economy went into a recession. Now you look at that and you go, damn Fed. These guys, man, they mess with the rates and then the economy goes into a recession. But I look at it the other way. They see the data clearer than we do, right? And so they see the recession coming up and they pause. Now, you could disagree with me. We'll never really know, right? We can argue about it. But they see it coming and they pause, which makes people think, uh-oh, why did they pause? Are they scared we're going into a recession? Now, the data that I found was cuts and hikes. So rate cuts and rate hikes. So we can't say that it has to do one or the other. All but one time. So in 1994-95, they paused and nothing happened. There was no recession at all. So the assumption now has to be that the Fed has paused because they see a slowdown. Now, there's nothing wrong with a recession, by the way. The markets priced in the recession last month, and October and November, right? So nothing wrong with that at all. If you're going to worry about anything, you worry about maybe losing your job. You worry about how much savings you may have. You don't really worry about your investments. So I didn't mean to get off on a tangent there, but with that sort of data, you've got to assume that there's at least a slowdown coming that they're trying to indicate. It's not my opinion, that they're trying to share with the world, hey, we see something you guys haven't really grabbed onto yet, and for that reason, they want to pause their rate decisions. They want the economy to sort of blow off some steam a little bit, and maybe we get back to normal. I don't know if I just made any sense at all, but we'll see. Charlie, I've been meaning to ask you what exactly Twilio does. I only know them from a fundamental standpoint. As far as all the geeky stuff, I'd love to pick your brain. Love to be with you. We're always usually at work. Can't watch the videos, or you watch but never live. So you're watching at work, is what you say? Do you think we retest the December lows? And if so, what would cause it? I've never seen such a rally without a pullback. Seems nuts. We actually did that video for custom. I've done a handful of them. If you go into the new dojo and you click on Geeky, that's where they're at. The data basically shows that we're going to get a pullback, right? So we actually went through how many times did the markets pull back after doing exactly what they've just done and make a new low, and how many times did they just pull back and then continue a rally? Really, really, I don't know. I like that stuff, so you might not find it very interesting. Anyways, I'm going to get ready. Back to work for me. Wine and Wealth tonight for customers. If you can't make it, you just check it out in the dojo. You don't even need to keep the email anymore. I appreciate everybody watching. If your advisor doesn't help you, like they're not here every day giving you updates, like they don't have videos and education for you, sales pitch, Jazz Wealth.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.